Hey everyone, welcome back to Corporate Decoder, the place where we unlock the secrets hidden in plain sight in corporate filings. And today we're diving into some serious financial statements for Tidal Trust. Get ready because we're about to unpack the latest shareholder reports for 3 SP's ETFs. So what's the big story here? Our latest look into the SP Funds ETFs reveals some interesting shifts in their holdings and financial health, painting a picture of how these specialized funds are navigating the market. Let's kick things off with the SP Funds Dow Jones Global Sukuk ETF. This fund tracks Sharia compliant Sukuk, which are like Islamic bonds, and we're looking at their performance up to May 2025. The fund's total size is around $314 million, and it holds about 139 different investments. That's a decent number of holdings, suggesting some diversification within its niche. The advisory fees told us they paid out over $720,000, which gives us a sense of the operational costs involved. Looking at where the money is invested, the Sukuk ETF has a big chunk, 52.2% in corporate Sukuk and a substantial 45.5% in foreign government Sukuk. This makes sense given its focus. Within the corporate Sukuk, finance companies and electric utilities seem to be the main sectors. For government Sukuk, there's a heavy concentration in sovereign debt, especially from Saudi Arabia, making up a big part of their holdings. When we look at the top 10 investments, we see names like KSA Sukuk Limited at 16.3% and Paasenggabat SBSN Indonesia 3 at 12.2%. That's a pretty significant concentration in just a couple of holdings. If something were to go wrong with these top investments, it could really impact the whole fund's value. It's like putting a large portion of your eggs in just one or two baskets. Next up, we have the SP Funds S&P 500, Sharia Industry Exclusions, ETF or SPUS. This fund tracks the S&P 500 but screens out companies that don't meet Sharia principles. This is a much larger fund, weighing in at a whopping $1.245 billion. It holds a lot more investments, 241 to be exact, and they paid out over $2.4 million in advisory fees. That's a considerable amount, but for a fund this size, it's understandable. The sector breakdown here is quite different, with technology taking the lead at over 45%, followed by communications at 20%. This reflects the underlying S&P 500 composition, but with those Sharia exclusions. Consumer, non-cyclical companies also make up a good portion, about 15%. The top holdings are familiar tech giants, Microsoft at 11%, Nvidia at 10.7%, and Apple at 9.7%. These three alone make up nearly 30% of the fund. This heavy weighting in a few tech companies means the fund's performance is very closely tied to their success. If these tech giants stumble, the whole fund feels the impact. Finally, let's look at the SPN's S&P Global REIT Sharia ETF, or SPARI. This fund focuses on global REITs that follow Sharia compliance. This is the smallest of the three, with about $153 million in assets and 33 holdings. They paid out around $377,000 in advisory fees. While it's smaller, its portfolio turnover rate is higher at 26%, suggesting more active trading within the real estate sector. Unsurprisingly, this fund is heavily concentrated in financials, specifically real estate investment trusts or REITs at 99.5%. That's extreme concentration, but it's expected for a REIT-focused fund. The top holdings here are all REITs like Goodman Group at 12.7%, Prologis Inc. at 12.4%, and Welltower Inc. at 12.22%. Again, a few key holdings dominate the portfolio. Goodman Group and Prologis are huge names in industrial and logistics real estate, so their performance is critical for this fund. Now, let's dig into the financials. Looking at the balance sheet, we see the total assets for each fund. The Sharia ETF has the largest net assets of over $1.2 billion, followed by the Sukuk ETF at $31.14 million, and the REIT ETF at $114.43 million, and the REIT ETF at $114 million. They also report significant investments in securities. For example, the Sharia ETF has over $1.243 billion in investments at value. When we look at how these funds make money, the Sukuk ETF generated over $6.6 million in income from Sukuk. The Sharia ETF brought in about $5 million from dividends, and the REIT ETF earned around $233 million in dividend. However, they also paid out significant expenses, especially advisory fees. The Sharia ETF, despite generating decent income, had a net investment loss of over $16 million due to those fees and unrealized losses. The financial highlights really break down the performance per share. The SP Fund's S&P 500 Sharia Industry Exclusions ETF, despite a net investment income of only 10 cents per share, experienced a significant unrealized loss, resulting in a total return of negative 2.21% for the period. This highlights how market movements, especially in tech, can heavily influence these types of funds. The Sukuk ETF, on the other hand, had a positive total return of 2.02%, showing that its Sharia-compliant debt investments performed better during this period. The notes at the end of the filing are quite detailed, explaining things like how they value investments. They use a framework called the fair value hierarchy, categorizing investments based on how observable their prices are. For the Sukuk ETF, all its investments are in level 2, meaning their prices are based on observable inputs, which is generally a good sign for transparency. However, for the Sharia ETF, as of May 2025, which is a relief, a big part of how these funds operate is through related parties. Tidal Investments LLC is the investment advisor, and Tidal ETF Services LLC acts as the administrator. They essentially manage the fund's finances and operations. The advisory fees are laid out clearly. 0.50% for the Sukuk and REIT ETFs, and 4.5% for the Sharia ETF. These fees cover most of the fund's operating expenses, which streamlines things but also means the advisor has a strong incentive to keep the fund running smoothly. The filing also touches on recent market events, acknowledging the ongoing volatility due to inflation, interest rate changes, geopolitical conflicts, and economic uncertainty. This is an important disclaimer, reminding investors that the market is unpredictable and can significantly impact fund performance. Hefty now, let's talk about what this all means. Firstly, the sheer size difference between the Sharia ETF at over $1.2 billion and the REIT ETF at $153 million shows very different levels of investor interest, or perhaps market appetite. The Sharia ETF's heavy tech concentration, while potentially rewarding during tech upturns, is also a significant risk. If the tech sector faces a downturn, this fund will likely feel it much more than a more diversified fund. On the performance side, the Sukuk ETF's positive return of 2% for the half year is encouraging, especially given the generally uncertain economic climate. However, the Sharia ETF's negative 2.21% return highlights the risks of that concentrated tech bet. For the REIT ETF, the negative 7.36% return for 6 months points to headwinds in the global real estate market, or perhaps specific issues with the Sharia compliant REITs they are invested in. The expense ratios, while not sky high, are noticeable. For the Sukuk ETF and REIT ETF, the expense ratio is 0 ETF, it's 0.50%. For the Sharia ETF, it's EADS 0.45%. While these are fairly standard for ETFs, it's crucial to remember that these fees eat into returns overs might be too high when the fund isn't generating strong positive returns. While these are fairly standard for ETF at a negative total return suggests that current expense levels might be a bit too high when the fund isn't generating strong positive returns. Looking at the concentration in the Sukuk ETF's top holdings with KSA Sukuk Limited and Perhatsos Penerbit SBSN Indonesia 3, making up over 28% of the fund, it's clear that diversification within its specific niche isn't as broad as one might hope. This level of concentration amplifies risk. Similarly, the Sharia ETF's heavy weighting in the top tech companies means its fate is largely tied to the performance of a few tech giants. Overall, the report shows specialized funds navigating different market conditions. The Sukuk ETF seems to be finding its footing, while the Sharia ETF is exposed to the volatility of the tech sector, and the REIT ETF is facing challenges in the real estate market. Investors in these funds need to be aware of the sector-specific risks and the impact of those large top holdings. Alright, that's our breakdown of Tidal Trust as latest reports for these SBIN's ETFs. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out our Discord in the description for more exclusive content and discussions. Thanks for watching, see you next time.